Guys, we'll be starting the session in next couple of minutes as some participants are still joining in. So good evening, everyone. Welcome to today's session of After Hours with William O'Neill India. And I hope everyone is doing well. So before we start off the session, I'd like to give a disclaimer that any stock that we'll be discussing today should not be considered as a buy or sell recommendation and should only be considered for educational purpose. So without much ado, let's start with Nifty 50's chart analysis for the day. Nifty had a gap down opening for today of around 80 to 90 points, then consolidated and moved higher and made an intraday high of 16,158. Then continued to trade lower around these levels, but it started to march upwards in the second half of the trading session. But in the afternoon session, it found resistance um, below the day's high when US futures started to trend lower. US futures was around 250 points lower, which led to Nifty's fall as well. However, during the initial fall, Nifty was able to hold around its 50 DMA, which was a crucial support. But during the last hour of the trading session, Nifty closed below the 50 DMA, which is the 16,162 levels, and Nifty closed marginally below that. Nifty closed around 16,058. So going forward, it would be good to Nifty to reclaim its 50 DMA going forward. And at the moment, it's resting at its 10 EMA, which is a short-term moving average. Talking about the top gainers and top losers for today, only NTPC was the one which had a considerable amount of gain of around 1.42%. All the other stocks that even advanced was in the range of 0.1 to 0.2%. On the losing front, majorly stocks was from the auto segment and the commodity segment, such as your Aisha Motors and your Tata Motors. Aisha Motors was a top loser as it declined by around 3.3%. Hindalco declined by around 2.8%. Infi by around 2.5%. BPCL by 2.3%. Grasim around 2%, and Tata Motors around 2%. Talking about the sectoral view, Nifty Realty was able to close on a flattish to a positive note. All the other sectoral indices closed lower, from Bank Nifty to Auto Nifty, Financial Services, FMCG, IT, Media, Metal, and Pharma. All of them closed from around 1 to 1.3% lower, which we can say it was a broad-based selling in today's market. Talking about the market status, Nifty continues to remain in rally attempt. We started the week in rally attempt, but Nifty was trading well above its 50 DMA, which was a good sign. Taking today's action into account, Nifty breached its 50 DMA, currently marginally below its 50 DMA, resting at its 10 EMA. Going forward, we would like Nifty to reclaim its 50 DMA, which is a crucial support. In this case, the resistance, and Nifty to stage an up move of 1.5% on higher, which is which can be considered as a follow through day. So if a follow through day is achieved, then the market status can be shifted to confirmed uptrend, which is a good sign for the markets. Talking about the key news for today, Adani Transmission's capacity increased 21% in Q1 FY23. Consumer base also increased to 3.09 million versus 3.06 million YOY. Distribution losses were also curtailed to 6.83% versus 6.88% YOY, and the company maintained system availability of 99.5%. During the quarter, Obra C project became fully operational, and line commissioning work completed in the JKTL project. On the distribution front, e-payment as a percentage of total collection increased to 74.7% in the quarter against 69.7%, which is driven by digital adoption push. On the technical front, if we talk about it, the stock is forming a stage 4 cup base, which is a late stage base. However, we can look at as the RS line is moving higher, and you can see good accumulation on the right hand side of the cup, which are good trades of a technical cup formation. But as we have always maintain that stage 4 and later bases are late stage bases, and which should be avoided as they have a higher chances of failing. Talking about the other key news, NMDC cut prices of lump ores and fines by 500 per ton each. Lump ore prices is now 3,900 per ton, rupees 3,900 per ton, and ore and fine prices at 2,810 per ton. The cut-in prices are roughly 36% and 45.5% from April levels before the government had raised the export duty. Global iron ore prices have declined by around 12% to $109 per ton, and local iron ore prices continue to be at a significant discount to imported iron ore prices. Prices are likely to remain low as demand was on account of slowdown construction activities amid monsoon season, which will impact the demand for steel. Q1 FY23 volumes for NMDC declined by 20% YOY to 7.7 million. On the technical front, if we try to relate it with the market news and with the government duties, if we look at the chart, the stock was forming a cup base, and in April, cup with handle base, and in April itself, when the news from the government came in, and the stock didn't break out, and it continued to move lower. And even the short-term moving average, such as your 10 EMA, is acting as a stiff resistance for the stock. Even today's action was considered a big negative. If you look at it, the stock declined by more than 5% on above average volume, which is considerably not a good sign. One other news on the company front would like to discuss is that RVNL bagged an order of around 1,844 crores of construction of 4-laning of NH5 on the Shimla bypass package for a design length of 17.5 kilometers in Himachal Pradesh. So again, Rupee hit a new record low. So Rupee has been on a depreciation spree, and global investors have been on a risk-off mode on fears of recession in US and the Europe. On Monday, RBI introduced a mechanism for settlement of trade in Rupee measure, which is expected to reduce the demand for foreign exchange and ease pressure on the Rupee. So talking about the key global macro data points, which is expected today. So it's from the US, and it will be is expected at around 6 p.m. Indian time. And majorly, these three are data points have to be looked at, which is the unemployment rate, which is according to consensus estimates is expected at 3.6%. The previous data point was also for the previous month is also at 3.6%. Non-farm employment change, which is the new jobs added for the month, apart from the farming sector, is expected around 260K. which previous month was around 390K. So, talking about the chart of the day, our chart of the day for today is Shopper Stop. So, before we discuss it, it's not a buy or sell recommendation, and we'll be just discussing it for educational purpose. So, Shopper Stop is one of the leading departmental stores and is focused on enhancing its share of private label brands and the beauty portfolio. So last quarter, the revenue recovery was little tepid as revenue recovery rate declined to 90% against 96% pre-COVID in Q3 on account of your Omicron wave in India during your December and Jan period. Going forward, the company is focused on share of high margin private label brands, which is 14% of revenues in FY22 and is expected to increase this to 25% in the next few years. The company also plans to open 12 new stores and 15 beauty stores in FY23 at a capex of 150 crores, which will be met through internal accruals only. Talking about the same sales growth or the SSG growth is expected at around 9 to 11% in the near term. So talking about the fundamentals, there are quite a positives to look for Shopper Stop. And on the ratings front, you can look at it as a price strength, which is great at 90, and even the buyer demand is great at A minus. On the RS front, the RS line is also trending higher, which is a really good sign. The number of funds for the stock has been increasing as well on a quarter basis by 24.32%. The EPS strength is poor, but if you look at the last 3 quarters of your sales and your EPS, which has grown in high double digits and has been accelerating, which is a good sign according to William O'Neill's principles. Talking about the technical formation or the stage formation, it's a stage 3 cup base that the stock is forming, and it's 10% from the pivot and nearly 10% of the highs as well. But if you look at the annotations I'd like to show, sorry, it's here and on the right hand side of the cup, you can see these big blue lines, which are highly above your average volumes, which shows good signs of accumulation, which is really good. And on the red bars, when the stock was declining, you can see just one bar which was above your average line, and the other bars were very low. So no signs of distributions or very low signs of distributions. So which is really a good sign. But as the market is not in confirmed uptrend, we would like to wait for the market to be in confirmed uptrend. And but people can still keep a watch on this stock as it moves closer to the pivot. And if it is able to break out from the pivot and market stages a follow through day, then it can be a good stock to watch out for. So, so that's it from our side. And please stay connected with us on the two shows in morning, that is the pre-bell with William O'Neill India, and in the evening after us with William O'Neill India. We expect to see you from Monday to Friday. Thank you, and